Hi there, welcome to Kneppy Invest. Time for another viewer requested financial year 23 result video. And to be honest with you, I have to get a move on with these videos because I still have quite a few of requests to get through. And I want to finish all the requests by February because that's when we see half year results. And by then, full year result videos will be almost obsolete. In today's video, I'm going to be discussing a company called Nanosonics, a company I do own, and I hope to own this company for the longer term. Nanosonics is all about improving disinfecting equipment in hospitals. Now, disinfecting equipment in hospitals has traditionally been a manual job. It can be quite time consuming, and Nanosonics manufacture and distribute the Trophon ultrasound probe disinfector and its associated consumables and accessories. They're also doing a fair bit of research and development in infection control and decontamination products and related technologies, including courses, which is the cleaning of flexible endoscopes. And I'm quite excited about that. And they also, not only do they have that Trophon, they've also got the next, I suppose, model in that ultrasound probe disinfector, because at this point in time, they're also selling at Trophon 2 units, particularly in the United States. And we also starting to see increase in sales in the rest of the world as well. So Nanosonics, infection prevention for life. Let's have a look at the financial results for financial year, or the results for financial year 23. And before then, let's have a look at the next 5 companies I'll be doing in this series. And they are Red 5, ARB Corporation, Johns Lyng Group, Polynovo, and a DGL Group. Also plan to put Elders somewhere in there because I was just waiting for that company to release their results in November. The company has released their results. The market liked it. Share price has rallied. So I'm not sure when exactly I will do Elders, but somewhere within the next few weeks, look out for a video on that company's financial results. A few important things to note when it comes to Trophon and Trophon 2. First thing is, how long do they last for the hospitals? Typically about 7 to 8 years, and then these devices are upgraded. And we are seeing hospitals go through that right now. The other thing I like to look at is a breakdown of the revenue generated by Nanosonics through their Trophon and Trophon 2 ultrasound probe disinfectors. So, of course, they are selling the Trophon and Trophon 2 probe disinfectors. So that's the capital, or what is called the capital. But the company also generates revenue through the selling of consumables and accessories. So we're talking about companion wipes, probe tags, probe covers, and operated cars. This company also generates revenue through services, contract services, preventative maintenance, and repairs. Now to the financial year 23 results for Nanosonics, and some impressive increases from financial year 22. Revenue up 38% to 169.9 million. Profit up 431% on a low base, because profit is only about $19.9 million for financial year 23. The company also increased the gross margins. I like to see that from 76.3% to 78.7%. Operating cash flow, free cash flow, almost around the same numbers as a profit. It's good to see that as well. And the company at this point in time, or at the end of financial year, had net cash of 112.2 million. And that's exactly what I want to see in a company. I want to see, or prefer to see, a company have net cash over net debt. Nanosonics has about 302.7 million shares on issue, which means at a share price of roughly $4.25, the markup of this company is $1.3 billion. And this is where some investors might have a problem with Nanosonics. When you compare the profit, 19.9 million, to the market, 1.3 billion, there is a valuation or possible valuation problem. So when you look at the P/E ratio, which I'll show you in the next slide, it suggests the market expects significant growth when it comes to earnings, probably also to free cash flow and operating cash flow in the next 5 to 10 years. And if this company doesn't meet that market expectations, you could see the share price pull back quite a bit from here. Equity, 163.9 million, nice increase from last year, up to 138, or up from 138.7 million. And with that means, with the company generating $19.9 million of profit, return equity is a nice 13.1. I would want that to be a little bit higher. And to be honest with you, I do expect return equity for this company to get above 20. And if I see return equity get above 20, that's probably a good sign moving forward for Nanosonics. Return invested capital 12.4. And this company doesn't have a dividend. And to be honest with you, as a shareholder of this company, I don't want to see a dividend. I want this company to pour all their cash flow into growing their business over the next 5 to 10 years. Now to the valuation, and this is where probably few investors have a problem with this company, particularly those who are looking for some value, because I don't see any value right now with Nanosonics. P/E ratio is 65.3. Now, one way you could argue, and I don't know if this is true for Nanosonics, is if you compare the P/E ratio of 65.3 to what you typically see for this company over time, but even then, I probably would think that 65.3 is on the high side. So again, the market is expecting some really good growth for this company over the next 5, 10, probably even longer than 10 years. Price sales ratio 7.7. EV to operating cash flow, one of my favorite metrics, 48.0, and that is quite high. In fact, sometimes I'll look at an EV to operating cash flow lower than 10 for possible value. So definitely Nanosonics right now, I'm not seeing really good value. Also did a reverse DCF. How would the free cash flow have to grow from now over the next 10 years to justify the current valuation? And this company will have to increase their free cash flow by 31.8% per year. So again, that does suggest there is a lot of promise, potential already built into the share price and the valuation of this company right now. One thing I like to do for all companies is look at a disaggregation of revenue. And typically you find this early on in the notes section of the financial statements. And what I mean by disaggregation is a breakdown of revenue into different geographic regions if a company is global, and also a breakdown of revenue into different segments or divisions. For Nanosonics, that is capital revenue, the selling of the devices or machines, consumables and spare parts and services. And this is found in note 2 of Nanosonics financial statements. So we can see the breakdown of revenue into different geographic regions, North America, Europe and the Middle East, and Asia Pacific. And they've broken down that revenue even further in those different geographic regions to capital revenue, consumer part or consumables and spare parts, and also services. And it's pretty obvious the vast majority of this company's revenue comes through North America. In fact, 150 million of their 165.9 million comes through North America, $8.1 million through Europe and Middle East, and $7.5 million in Asia Pacific. $88 million of revenue is consumables and spare parts, $49.6 million capital revenue, and $14.2 million services. Another thing I like to look at is spending for growth. So we could say capital expenditure, but capital expenditure can be broken down into capital expenditure for maintenance and capital expenditure for growth. So in the company's financial year 23 presentation, they did include this particular slide, investing in a significant infection prevention market opportunity. So 46% of their spending, $114.2 million of spending. So this company could be more significantly profitable if they weren't spending a lot of money for future growth. And that's one of the reasons why I like this company, because they are thinking about the future. So 46% of that 114.2 million was for the driving or ongoing growth in mature markets and expanding geographical presence in emerging markets. Emerging markets is not those third world countries. This includes Germany, Japan, European Union, and China. 26% of the spending is research and development. We're talking about product innovation, Trophon 2, another product or possible product called Auto Pro, and Courses. And 28% of their spending is operations or is used for operations, headquarters, and support. Now to the financial history for Nanosonics, focusing on revenue, gross margins, and cash flow from operations. One of the first things, if not the first thing I look at when I start my research process on a company is revenue. And I want to see revenue growing through time. There are a few reasons behind that, but when we look at Nanosonics revenue growth, it is quite impressive. From 21.5 million in 2014, so this is a 10-year history, so $21.5 million in 2014 up to $165.99 million in 2023. And if you do look at year-on-year growth, most years the revenue is higher or stronger than the previous year. Not always. There was 2018 when revenue did fall down, but that was just a one-off. Now onto gross margins. Another thing I will look at for all companies. And at least I want to see gross margins not declining. So either going up through time or remaining at around the same levels. And since 2016, the margins or gross margins for this company has ranged between 75 and 78%. And over the last 4 or 5 years, gross margins for Nanosonics have grown over that period. And that's actually a good sign. That is actually suggesting that this company has some pricing power. So you do see a company with pricing power able to increase their gross margins over time. The other thing I've included here is cash flow from operations. And to be fair with you, for a company like Nanosonics, I'm less inclined to look at cash flow from operations because it can be quite lumpy and can be quite volatile from year to year. So this is a secondary thing I will look at. And if you do look at the Nanosonics cash flow from operations history, you can definitely see some lumpiness. So some years it grows quite strongly, some years it pulls back, and really has gone nowhere or virtually nowhere over the past 7 or 8 years. So I don't really focus on cash flow from operations. I'm not really focusing on the earnings per share of this company just yet. I want to focus on the revenue growth. I want to focus on the gross margins and how much this company is spending for future growth. I was going to say future growth in the future. Well, for future growth and story. Now to the chart for Nanosonics, and this is the weekly chart going back to 2013. In fact, the start of 2013, when we started to see a little bit of excitement in this company. And in fact, if you go back to look at the revenue or the financial history, back in 2013, we can't see it here, but the revenue was not much. The company was not operating cash flow, free cash flow positive. Gross margins were fairly low. And then the company hit an important inflection point around about 2014, 2015, particularly 2016, when they became operating cash flow positive in that particular year. So even though I did say I don't really focus on operating cash flow, I did focus on operating cash flow and free cash flow for this company back then because that was an important inflection point for this company. Then they achieved that in 2016 and they continued to grow their revenue, but they were funding the growth of this company through cash flow in their operations, through free cash flow. And that's really important for all companies because you don't want to go back to the market or keep going back to the market for more money through capital raisings, that sort of thing. So anyway, the share price started to move in an uptrend back in 2014. And in fact, if you look at this weekly chart, the share price of Nanosonics had been in an uptrend from the middle of 2013 all the way through to sometime in 2020, 2021, a beautiful uptrend. Share price reached a high of $8 in January 2021. And that was not the top of the market. Top of the market was around January 2022, if I remember. But the share price has been struggling over the past few years. And one of the reasons why the share price has been struggling over the last few years is if you do look at the profit of this company, it's been up and down. And even though I have not included profit in this particular slide, if you just look at the cash flow from operations, you can see cash flow from operations fell from 22.8 million in 2020 down to 7.3 million and 6.7 million in financial year 21 and 22. And the market did have a little bit of a hissy fit about that. That's why the share price has struggled over the past few years, because the company has not been able to, maybe on purpose, not been able to increase their profit, increase operating cash flow and free cash flow between 2020 and 2022. And the market obviously wanted to see that because the company was increasing their revenue and they wanted to see that translated to profit and operating and free cash flow. And there are reasons behind that, which I won't get into this particular video because I just want to concentrate on financial year 23. That is all I have for Nanosonics financial year 23 results. As a shareholder myself, I thought these results were okay. But to be honest with you, I'm not really focused on any financial year results for this company. It's all about the future growth this company could achieve over the next 5 to 10 years. And if they are able to achieve that growth, this company will be a much bigger company in 2033. Yeah, 2033. Yeah, we're 2023. Anyway, so that's what I'm looking for. That's why investor for this company is just that potential future Right. And the market sees that. That's why the valuation of the company is quite high at 1.3 billion, particularly when you compare the valuation to the profit of Nanosonics. So if you have any questions about this company, any thoughts, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.